The S&P 500, the Nasdaq 100, that's what we're covering here on the day. Now, when we look at some of this action, we look at this movement, we're still coming into that brick wall, right? If you followed on Twitter, then you kind of saw where this level was established as well. So you can see that 14.4 level. Again, you go to the daily, so you can see it's at August 22 highs right there. Now, zooming back into the chart, getting a better viewpoint, in my opinion, we're still flagging. It's like a bear flag here, right? We go to a little bit more of these other charts. We zoom in a little bit more. You can see that sellers are stepping in very heavily here on our chart prime indicator as well at those local highs of roughly 14.4, 14.6. Now today, it might have been even more interesting, with the potential trap that we did have kind of set out here early on in the morning, right? We pushed up very strong to open the day and then sold off immediately from those levels back down. Now, the area of where we have to really focus on here, and if you're not watching the Nasdaq, I'm going to explain to you why you need to be watching it. But the area you need to be watching now is in between here, 14.4 to essentially 14.3 flat, right? The 200 SMA on the daily. For all the people that keep messaging to, like my 200 somewhere else, you need to make sure your futures contracts are adjusted right here for changes. If you don't know, futures have rollover days. If you don't understand that, it's a basic thing regarding futures. We need to make sure that's being adjusted properly. Okay, so when we look here, you're flagging in this area. We're also seeing some buyers try to hold you up. But ultimately, and this is based on the 2 hour, you can see there's just wicking back down to that 14.3 level and then bouncing off of it. So it's kind of a give and take here. But this week specifically has a lot of issues that we have to discuss because I do believe a massive trap could be on our hands coming into Wednesday and going into Thursday. Okay, so when we look at these charts, let's go over a few things here as well. It's SPY, right? SPY coming back into some of these levels as well, right? You're bouncing off this 410 level, right? I don't know why that area disappeared on me. You can clearly see where we're bouncing locally 410. This goes back even further. You can see these previous highs back here. It goes all the way back over here, roughly 410. So really about right there. That's where you're going to mark it at, and loosely 410.5, 410 flat, right? So going back into the 2 hour chart, we can see we have this level 418, which has been the major line in the sand as well. Almost the same thing for NQ 14.44. Okay, this is February 1st FOMC highs, right? Before we dip back down going into the banking crisis, right? So looking here, when we break through these massive levels, right? We came, we bounced, we broke through. We want to see that retest, ideally, and then the push back down. Now, if we see that rejection there, that's the confirmation we're really looking for. Now, I said there's some things happening this week. I'm going to talk about them, but before you do that, I ask you to do two things. Consider liking and subscribing. It helps out tremendously, okay? I appreciate all love and support. If you want to see what we're trading, how we're trading, the Discord link is down below, so make sure you check it out. But again, when we're looking at these levels, right, number one, you do have the Fed meeting on, I believe, Wednesday, November 1st, the Fed meeting. Very big. The Fed rate decision as well, okay? Now, in my opinion, I believe we're going to get a halt. I think we get a pause. But even though we get a pause, I'm going to tell you why I don't think that's necessarily good news over the next few days. But shortly after FOMC, which is Wednesday, guess what's coming in? November 2nd, after hours, Apple earnings. Now, I'm going to tell you this right now. We have not had Apple earnings or a major earnings report come in the day after a rate decision. I can't think of a time, actually. I really can't. If we look at what Apple's doing tonight, I think in 30 minutes, 7 o'clock or an hour from now, they're having the Apple Scary Fast event where they're going to announce the new M3 chip, most likely, and maybe something else. I personally just don't see Apple having good earnings. That's not based on bias. It's based on fact and what's happening out of China if you don't know. Go look at the data coming from China. Go look at Apple sales getting crushed in China right now and getting just absolutely decimated to the downside. All their sales. One company that we can, and actually we'll go to two companies that we can look at having similar issues with China based on either trade restrictions or just overall slumping demand. Two companies. Number one, Tesla. Now, if you followed any Tesla, TA, anything like that we've been tracking, all you had to know, and I'll go over Twitter here in a second, all you had to know is you get below the 200 SMA, which was at 207, okay? If you're not following on Twitter, that's your own business, but again, it's free game, free content. I told y'all this 22 hours ago. If you get below 207, you are very bearish. Very, very bearish. We almost went right down to target number one of 190, 191. These wicks they're not printing right on any of the brokers. I don't know what's happening with Tesla, but the action's been crazy. You got below 207, you went straight down to essentially the actual lows we maintained at were like 94, 95. So you got wrecked there. Okay, but Tesla, since the China news started coming out, brutal. Nothing but downside here. Number two, NVIDIA. This is different, right? It's not overall demand that's dropping here with these companies. It's that they're being banned from operating, right? So NVIDIA as well, very, very weak structure that's playing out here, right? Since this news came out, just massive downside also. And we saw it really start back here, right? Two really major companies that have been dominating, right? I would argue that Tesla, great upside since the beginning of the year. NVIDIA, probably the best name since the beginning of the year. And then Apple has had a massive run since the beginning of the year, right? Rewind back here into January, 120 into highs of almost $200 a share. Okay. Now, I'm not saying you're going back into lows, but I'm telling you, you need to be careful. Okay. You got to be careful with where you're at. And the major level that you're watching here, when we go back to the 200 SMA on the daily, okay. And usually I don't go over equities first, but I think this is really playing out here. You're seeing that touch back into the 200 SMA and the 171 level. But ultimately, as long as you stay below this, I'm very bearish. We've seen the previous moves we've had here, okay? Understand what's happening, understand where we're at, understand the risk that you're taking, in my opinion, by betting long here, okay? Those are things we have to be able to identify and to watch. Now, something I will say too, a lot of you are having questions about what we're covering here and what's going on our charts and what's happening here. I do want to give a shout out to Chart Prime. If you're looking at trying to identify these key levels and things along those lines, Chart Prime is going to really change the game for you. Also, we just added our custom script. So when you use our code or the link down below, you can check that out. You get 30% off, number one. But also, two, you're going to get the custom indicator for volume coming into TradingView down here. So it's going to tell you how much volume versus buyers and sellers. And there's also a custom script that shows you level 2 data, but you can only use that for Forex, trading crypto, and then also futures. Okay, it won't work for equities. So understand that, but the new feature right there. And again, I'm not using it too much in the video. That's mainly for day trading. That's what I'm using that for. So understand that. Take advantage of it. The link is down below. So again, Apple, that's what we're reviewing here. Now, I want to go over a few more things. The dollar. Again, when I'm making these videos, I try to anticipate questions you guys may have. Okay. Now, when we're looking here, you can, again, Chart Prime does a really good job of this. They show you where those buyers or sellers really are at. And on the daily chart, the only level that's confirmed is they're right there at 107.2, the top of this range. Now, you're seeing some, in my opinion, movement based on fundamentals. Okay. So when we see this fundamental movement, you're dropping here. Why? So you had the bull flag playing out. You're trying to break up. You came back down to this. Basically tweak their monetary policy. So they're going to let 10-year yields rise and exceed above 1%. They want them to get higher to hopefully not have an inflation issue down the line, right? So they're trying to let these start to pile up. We've seen Japanese policy go a little bit off the rails this year in comparison to previous years. USD, JPY, you can also see this is the main reason because JPY overtook a lot of strength on the day. The USD got slapped and typically this has been a risk on versus risk off metric. Now, I think today is not a good day to use that as an example based on what all happened today. And it was a lot of monetary policy things happening, but the market didn't really bounce on this news. We actually proceeded to drop on this news. So things you should be considering. The one area you need to be watching vigilantly is oil. Oil is again back down at $82. We have been bouncing time and time again down here, but we're seeing lower highs established and new resistances happen every time we bounce here on oil. So this is a bearish trend that we're trying to form out here, and it's looking like it wants to come back down to the 200 MA. But if we bounce here again, I don't see this being good for the market. But I will also say what's happening in the Middle East is causing a lot of issues across the board, and you need to be paying attention to that. Because the second something pops off and the wrong country gets involved, you're going to see oil pop quick and probably reach $100 a barrel. Quick, lightning quick. I'm telling you, you got to be watching it. Yields. Again, the 2-year is still sitting above 5%. The 5-year is just flatlined, basically 4.8, doing nothing. Previous highs here as well mentioned. The US10 bouncing on previous highs as well. The US30 sitting at 5%, still very bad for the economy. Now, it's also important to realize, and all these key levels are mentioned from chart prime as well, which you can see they come right into. So I know a lot of people are asking about like what's happening in the colors in the chart. Things are happening differently here. Now, what I'm going to say here is you're going to hear the Fed mention, and these are things you need to be listening to or looking for when the Fed talks come Wednesday. What do they say regarding long-term yields and rates right now? Because they've been saying that this could potentially be replacing the idea of raising rates further because yields are helping slow the economy. Okay? These are things we have to be viewing. We also have to talk about what's happening in the housing market. We're seeing it slow, but the housing market, people are still buying homes at very high rates. So we're not necessarily seeing the house market crash. We're just seeing it slow back to like pre-2020 levels. And it's important to realize 2020 through 2021, the market was on fire, going crazy. Everyone was buying. So just because we're back at 2020 levels doesn't mean the housing market is crashing or even in a bad place. That just means we're not at all-time high territory on people buying homes. This will continue to hurt rent prices and the inflation metric on the rents. But I don't believe personally that the Fed is looking at that much because they have to have half a brain and be able to identify if yields are rising, home prices are just unobtainable based on those mortgage rates at 8-9%, which means people have to go rent. It just makes logical sense. And I hope and pray that the Fed can explain that in a logical, rational way. Fingers are crossed, though. So those are things we're looking at. We also had PCE data, came out flat or at expectations. So again, not a big surprise there. At the very least, they're going to most likely say inflation is stalling where it's at right now. I don't see how they could push an agenda of saying that inflation is still retreating because it isn't. But those are things to be considering and to be watching for going into that Fed meeting. So overall, giving you a viewpoint here. I'm not going to go too much into a lot of things here. I want to be pretty short and to the point. Going into Wednesday, Thursday. Wednesday primarily. I don't think we get above 418 before the Fed meeting. I think the Fed meeting could shoot us over 418 though. Worth mentioning. Okay? But I encourage traders to not get overconfident in anything here before Apple reports earnings. We have seen what Apple can do to the market. It's important to realize too, I mean, Apple, it is very big on the S&P, to say the least. I don't know how else to say it, right? If Apple starts to break down, I promise you, I'm willing to bet big money that the S&P gets hammered as well. So stop getting over aggressive. Now, really quick too, we've been working on a lot of things here on the channel. So we've been trying to get new sponsors or companies that we can work directly with when we do all of our content. Obviously, as of lately, we really haven't ever been able to go over option contracts with you guys or show things like this on the channel. That can change now because now we're working directly with Options AI. This is a platform basically built around trading options and teaching multi-leg options as well. So not only are we going to be able to show you trade ideas as well going into Apple and other stocks that we're liking, but we're going to be able to show multi-leg options and show you different ways to associate risk on your account as well. Right? Not financial advice, but always trying to find new ways to educate and find the best opportunities. So one, when you go to Options AI, you can go down to earnings and you can look at that stock's earnings. So when you see the expected move for their earnings, the expected move is about 4%, up or down both ways. Okay. And then it also shows you previous earnings, how much they moved: 4.8%, 4.7%, 2.4% the following day. So things to consider here. So coming at 3.7, that's about, I believe, give or take, $7. $7 is on the high side. It's totally possible Apple moves that much, right? So going into Apple, we're rejecting at the 200. If you sit here as well and you reject back down, my longer term target is down to 157, 158. Now on Amazon, I didn't think you would hit that 200 MA, but we did. So again, I don't think anything's off the table here. Personal opinion. So going into Apple, I'm not a huge earnings player, but if you're trying to trade Apple, I'm going to tell you right now, again, obviously I'm looking at the downside. That's my overall trend here. If I'm taking any trade though, the shortest dated I'd be going is for December 15th. And any trades that I'd be looking for personally, and you can actually come here now, I'm looking for bearish trades. So you're going to be able to generate those trades now. You're going to get naked puts, put spreads, call spreads, and they'll basically teach you what you're looking at and the probability of success on those trades. Now, obviously, it's not accounting for TA or anything along those lines, but what it is accounting for too is what's happening just based on the math, right? So definitely teaching you a few other things along those lines as well, however you want to trade that. So looking at naked puts as well, obviously, I'm not looking to buy 30 of these contracts. I'd be going small because, again, trading earnings is very risky. But I'm going to tell you right now, in my personal opinion, I do believe Apple has significant downside opportunity, and I think their earnings are not going to be ideal. Personal opinion. So again, it gives you a good viewpoint of what you're looking at here and how to be identifying that. Today, I'm not going to have too many equities to be covering. I'm just telling you, I think everything is at major levels. NVIDIA back at 410. Tesla already broke down, pretty disgusting. But across the board, you look terrible still. I'm going to tell you that now. And if we look at these daily candles that you're putting in on something like the Nasdaq, I'm not a bull here. You're still just flagging back at the level, right? To get bullish again, you at least got to like mount back above 14.6, bare minimum, right? SPY, at least get above the 200 SMA, 423. We're just not there yet. Can we get there in the next few days? 110%. But again, we're just not there. As far as trade ideas, again, I'm really looking forward to using options AI here on the channel. Sorry, misspeaking here. But again, I just don't have enough equities I want to cover on the day. More stuff will be coming, so look forward to that. And if you have questions on the platform, please comment down below. The only reason why we're even consider working with them is because we're actually able to be hands-on with these guys when it comes to developing their app and new features that's going to be coming to the platform. So we really have been building this relationship for like 7 to 10 months since early January this year, but we just kind of got it finalized and their mobile app just got established. So again, if you have questions, please comment down below. The link for that will also be down below. Have a good one, traders.